2, 1, go. You're listening to The Kyle Chambers Show.
And welcome to the Kyle Chambers Show. My name is Kyle Chambers. I'm here today with Matt Doughty of Matt Doughty Mortgages, and he is a mortgage broker in the Stratford area. Thanks so much for joining the show today.
No problem, Kyle. How are you today?
I'm good. How about yourself?
Yeah, I'm doing well. Another week. How was your long weekend?
It was good. Just hung out with family, watching football. How about yourself?
Good. Yeah, same. So got together with some friends, enjoyed the last weekend. Of, I guess, unofficial last weekend of the summer. Ready for exciting fall.
That's good. Why did you want to get into mortgage broking there a few years ago?
You know, Kyle, I'd done quite a bit of real estate personally on my own. I was working with a mortgage agent at the time, and I had moved a few properties, and I was kind of looking into doing something that I thought was going to be maybe less of a stress-free work environment. Turns out it's still very stressful, can be at times. But I get to work from home now, which is nice. A little more flexibility in my schedule. I get to essentially work for myself, kind of my own boss, and the rewards you get as a result of your own productivity. So, yeah.
Yeah. How has the market shifted over the years since COVID and going into the post-COVID era?
Yeah, so it's a lot. It's very dynamic. We were seeing a very competitive market, and when COVID hit, that's kind of when I started getting into the industry. And unfortunately, I got into the industry just as rates started to rise. And I saw the rates coming up and up and up. So we were having to lock our clients in, hopefully with lenders that would allow us to do so that their rate would be protected in their pre-approval. And now we're seeing kind of a decline in interest rates to when we actually close on a house. So we're seeing rates come down. So it's interesting that you're seeing the crescendo up, and then now we're seeing it come down as well.
What should people keep in mind before they purchase a house?
Quite a few things. So I think the first thing is you should come to a mortgage advisor. You should come to me. Let us do a pre-approval for you. Let us take a deep dive into your financials to see where you're at, because we can build a game plan for you. I think building a budget is really big as well. You have to start looking at a few things as well, Kyle. So I think you need to look at your down payment scenario. So the rules are loosely 5% down under 500,000. Anything over 500,000 is a coupled and bracketed 10% down as well. So you need to look at what you have for a down payment. The reason that you want to come to a mortgage advisor or a mortgage agent is because we can look at something called your income to debt ratio. So your total debt servicing and your gross debt servicing. And it's really important that we see, how much money is coming in compared to how much money is coming out, because there are thresholds that you have to meet in order to qualify for a mortgage as well.
That's interesting. I imagine it would take time to be able to sit down with your clients, go over everything, and make sure everything's rock solid.
Yes and no. Yes, for sure. We are thorough, absolutely. But as long as we can get some of the documents that we need up front, we can run a pre-approval fairly quickly within 24 to 48 hours, as long as we can see the documents that we need. And those documents, they're pretty simplistic. So simply, we need to see some of your income verification. So we're going to see some photo ID. We're going to pull a credit report. We're going to have something for you to sign as well. We're also going to have you provide us with your most recent pay stub, maybe a T4, maybe a couple year T4s as well. Maybe a letter of employment from your employer, depending on how in depth we need to go with your pre-approval as well. They're simplistic docs, but having these in shape, we also want to see your savings account. We want to see, are you making any car payments? Is this your second property? Do you have other property debts as well? We may be looking at like a co-signing situation. We're seeing, particularly in the first-time home buying market, we're seeing a lot of parents co-sign as well. So we may need those docs from them as well. And they may be already responsible for a property. So maybe we need to see a property tax bill as well, just to see where everything stands.
Do you find that business changes depending on the season?
I would like to say yes. Obviously we follow a lot of the trends that the real estate market does as well. So typically speaking, in the spring, we see a pretty hot spring. And that's when real estate starts to move. I would say this year we hadn't seen a very hot spring, and I think that had a lot to do with the maintained higher interest rates. That being said, we're seeing interest rates come down, so I have a personal prediction that our fall is going to be quite busy.
What is the future for Matt Doughty Mortgages projecting into 2025?
Yeah, so my personal business, I'd like to keep expanding. I want to keep increasing my network, especially with my referral partners. I want to keep bringing on more and more of a bigger network that helps feed the hopper. I want to start focusing in on a couple other demographics as well. We're going to see a big shift. It's called the renewal tsunami that's coming across. So lenders, we have a lot of access to a lot of lenders. They are bringing in quite unique products to try to appeal to bringing over those transfers. So people that are coming up for their 5-year, 3-year renewal. So I want to be able to capture that clientele as well and provide them with the best product available to them.
Thanks so much for joining the show today.
Okay, thanks, Kyle.